Just BG dollars back, and today we're looking at obviously inflation coming out tomorrow. Huge numbers there, big data, and that is a big market mover. So we've got to make sure that we're on the ball with this bit of data, and we're going to go through what we think is going to happen. You know, is it going to come out higher? Is it going to come out lower? If you're bullish, obviously you want to come out lower, and if you're bearish, then you want it to come out higher. Of course, we've got CPI and core CPI. CPI forecast is 1.1%, and for year over year, is 8.8%. So huge numbers for a year-over-year CPI there. 8.8%, obviously higher than the peak we saw in the last CPI report. So yes, hopefully, I've been saying this, I think inflation will come down. I'm actually bullish on the markets. I'm bullish on stocks, and I'm going to take you through why. But first of all, it is stiflingly hot here in the UK. So I've got my chug here. This is my trusted chug. You know, it's nice squash, bit of glucose. And it is freezing cold. Could we stick it in the freezer? So I'm going to have a sip of that just now. Oh, it's beautiful. It's beautiful. But yeah, let's take you through. Look, so this is a lovely little website here that I've just come across. Basically, we're going to see how the market reacted to the CPI reports in the last 6 months. CPI report days in 2022. So, of the last 6 CPI report days, the S&P 500 has opened lower 66% of the time. So 4 out of the 6. And those days were February the 10th, it opened up down 1.4%. March the 10th, it opened up down 1.1%. May the 11th, it opened down 0.02, so nothing really much there. And then June the 10th, obviously, opened down 1.66% for the S&P there. What we got to make sure and we got to understand that CPI actually comes out before the market open. CPI tomorrow comes out at 1:30 p.m. The markets open at 2:30 p.m. This is British time, okay? So obviously in America, it's just an hour before the market opens in American time or wherever you're living. Of course, 3 of those 4 red opens were greater than 1%. Average S&P open on the CPI day report is down 0.478%, so basically down half a percentage point. A look at the closing statistics. Obviously, you want to see where the market's closed at the end of the trading day. There's only been 1 green close, which was on January the 12th. So 5 out of the last 6 CPI report days, the S&P 500 has closes red. And of course, the market is still open now as I'm recording. So do I sell? Nah, because I think CPI is actually going to come out lower than expected. And we've never seen that, which we'll be moving on to in a minute. But first of all, is this an article to tell you to get bearish, you know? Should you be getting bearish at what we're reading right now? Absolutely not. You know, absolutely not. It's worth noting that of the 6 CPI reports in 2022, all have been either in line or negative. So they've always been in line with the CPI expectations, or they've been above CPI expectations. So it goes to show that if we actually get one below CPI expectations, the market could really move on that news and actually turn bullish. So that's what I mean. Look, 2022 has not actually seen a positive CPI report in which the inflation number comes in below the estimates. Now that data is in your hands, it's time to make a decision. You know, are you bullish, bearish, or neutral? And then it goes on to talk about options, but I'm not going to discuss options because I can't even do options in the UK. But we're just going to discuss why I actually think that the CPI is going to come out less than expected. Now, one of the first things is Target's inventory, and it's not just Target. You know, you've got Walmart in this, you've got Costco, huge retailers, right? And they've had massive inventory issues, and this was actually reported on the 14th of June. If you can see it up here with it on the website there, look, 14th of June, the Motley Fool produced this. And at more than $15 billion, Target is sitting on a huge amount of inventory. Now, why does a huge amount of inventory matter? Well, the company is going to have to significantly mark down inventory to get it moving. He doesn't want a load of inventory, a load of stock that it can't sell in its warehouses. Its warehouses are full. How is it going to sell items? They can't get rid of them. So they're going to have to start putting prices down so they can get rid of them quick. They don't want 15 billions worth of inventory just lying around. They want to get it sold, all right? And of course, they're going to have to, there we are, look, worsening margins. They're going to have to reduce their profit margins to be able to sell these items. And they're going to have to sell them at a much smaller profit than they normally would. Hence why there will be some great sales in the short term, which is obviously good for inflation, because if prices are coming down, then obviously inflation means it's coming down. So that's one thing, inventory. Loads of retailers, as I said, this is not just Target. Lots of retailers have got these inventory problems, and they're going to have to start reducing prices. The next thing is why I think CPI will come in less than expected is oil, believe it or not. And of course, oil tanked actually during the month of June. Of course, this was where the start of month of June. So we started at $115. We rose up for the first week, 2 weeks or so. You know, look, June 13th, June the 14th. Around mid-June, obviously, boom, we tanked massively. And we dropped all the way to $101. Not seen since the early May stages. We rose up, we broke this positive trend line. This was a trend line. It bounced here, bounced here, bounced again here. We came down, we couldn't bounce off it. We broke through, we came back, we tested the trend line again as resistance, and boom, we sold off. That is officially starting a new trend, and I expect oil to come down actually to the 80s. Yeah, big statements there, but I expect oil to come down to the 80s. Of course, I'm no financial advisor, so don't quote me on this. And, you know, do not sue me if I'm wrong, all right? It's just my opinion. Going into the inflation report, stocks have actually been quite bearish, haven't they? Obviously, Monday, yesterday, we had an awful day in the markets with big tech down massively. So, yeah, it wasn't good for my positions. But, as I said, I'm in it for the long haul. What am I going to do if inflation comes out higher than expected? That's a tricky decision to answer, but of course, we've got to think ahead as we are investors. I would probably still keep my positions, but I would have to be looking at the market and sort of a technical analysis one to see what would happen. If we have a quick look at the SPY, actually, then yeah, this is a sort of trend line that I've been following at the minute. We'll go on the 1 hour sort of market there. There we are, look, boom. We hit it, we bounced off it. We hit it 1, 2, 3 times, we bounced off it. If we break this trend line to the upwards and we fall right below it, that will be huge news, and that is probably going to be the reason why I would sell, because then I think we're going to head lower and lower. But of course, there always is a double bottom possibility where we come down to the bottoms here and then we bounce straight back up. So if we have a positive, a negative sort of inflation report, by negative I mean above expectations, and the market tanks through this tomorrow's trading day, I would probably sell out of my risk on positions. But if we have an inflation below estimates, then of course I'll be holding no matter what. Even if it breaks down, because inflation has come out less than expected, I'll be holding my risk on stocks for sure. Now, another thing I just want to show you quickly, again, if we look at the past month, right, this is the past month, this is all the sectors in the S&P 500. I do keep recurring this sort of theme on the channel, but it's very important. Energy has fallen 20% in the last month. 20% in 1 month, okay? Biggest sector that's dropped, and following it is materials, down 10% in the last month. Again, 10% is still a lot to lose in one singular month. And they're both inflationary, aren't they? Both inflationary sectors. You've got energy, which is your oils, and then you've got materials, which is like your metals and your woods for housing and stuff like that. Your materials, we know what materials are. And yeah, they've both been dropping massively in the past month. Again, another reason why inflation we could see below estimate. Of course, industrials again was down next for the month, but industrials isn't really much more of an inflationary sort of pressure. So yeah, bottom line is I'm bullish on stocks. I'm holding my risk on stocks. If inflation comes out above expected and we break this sort of trend line, then I will be selling out of my risk on stocks and I'll be making a video on it. If inflation comes out below expected, I'm holding my risk on stocks no matter what. I believe that it will become up below expected because, as I said, inventory issues, oil, the price of oil has come down. We've seen that in the energy and materials sectors in the S&P 500, the biggest losers in the out of all the sectors of the S&P 500 in the last month. And yeah, I just have a general sort of consensus, just a general sort of estimation that inflation will come out lower. And it will be the first one of this year where inflation has actually came out lower than expected, as we saw in this report. So that has been BG Dollars, and hopefully I have helped you make a decision on what you think. Because of course I'm no financial advisor, could be wrong, could be right, who knows? You've got to make a decision yourselves, and hopefully I've helped you out with that. That was all this video was supposed to be. There we are. That has been BG Dollars. I'll see you in the next one.